Welcome back to the deep dive. Today, we're jumping into a financial argument that has gotten, well, it's gotten really loud.
Extremely loud. We're talking about the ultimate battle for the future of money.
Bitcoin versus gold.
It's the essential clash of our time. You've got the old champion, gold, argued for by people like Peter Schiff.
And then the digital challenger, Bitcoin, with voices like CZ from Binance in its corner.
And this whole debate, it's more than just two assets. It's really a clash of philosophies.
Exactly. It's about trust, about value, and about what personal financial sovereignty even means anymore.
So our mission today is to really dig into the sources, look at the core arguments, the tech, and the biases on both sides.
The goal here is to help you get past the noise and form an opinion based on data, not just ideology.
Right.
Okay, let's unpack this. If we're talking value, we have to start with the foundation, which is scarcity.
Absolutely. I mean, both are valuable because they're scarce.
Right.
But, and this is the key, their scarcity works in completely different ways.
Gold's scarcity is physical, right? It's the argument Schiff always makes.
It's his whole focus. It's physically in the ground. You have to spend enormous amounts of money, energy, and time to get it out.
That gives it a sort of proven historical scarcity.
For sure. The supply only goes up by about 1% to 2% a year. It's incredibly slow.
Yeah.
And that's what helps it hold its value over the long run.
But the sources we looked at point out a physical risk here, which I found fascinating.
Yes, the physical risk. The idea that its scarcity isn't absolute.
You mean like finding a massive gold-filled asteroid?
Hmm?
Or some new tech that lets us mine the ocean floor super cheaply?
Precisely. Gold scarcity is tied to geology and our current technology, and both of those can change.
Okay, so contrast that with Bitcoin, CZ's argument.
It's a totally different world. Bitcoin's scarcity isn't geological, it's mathematical, algorithmic.
21 million units, period.
That's it. It's written in open source code, and it's enforced by a global, decentralized network of nodes. Thousands of them.
So the emission schedule, how many new coins are created, it's completely predictable.
Transparent and, for all practical purposes, immutable. The argument is that it's harder to change the code than it is to find a new gold mine.
But Bitcoin has its own scarcity risk, doesn't it? The sources mentioned it's more of a philosophical one.
They do. The risk is that its scarcity could just be seen as irrelevant if people stop using it or trusting the network.
Then it doesn't matter that there are only 21 million.
Exactly. So what you're really trading is physical certainty for algorithmic certainty.
So the debate isn't if they're scarce, but which kind of scarcity you trust more.
That's the core of it.
Yeah. Okay, so let's move from philosophy to practice. An asset has to be easy to hold and move. And this is where it gets really interesting.
Utility custody, maintenance costs, all that stuff.
Yeah.
And this is where gold advocates immediately point to its tangible nature. Gold has intrinsic utility.
You mean it's used for things other than just being money?
Right. Jewelry, electronics, industrial uses. It has a floor price that comes from its real-world demand, something Bitcoin just doesn't have.
That's a powerful argument. But that tangibility, that physical nature, it comes with a huge hidden cost.
Custody.
Custody. It's expensive. You need vaults, safes, secure transport. You need to verify it's pure. Schiff's arguments kind of gloss over that part.
They do. Those storage and insurance fees, they eat away at your returns year after year. It's cumbersome.
And Bitcoin, well, it completely flips the script on that.
The digital advantage is just undeniable here. Custody is global and almost free.
You can carry millions of dollars in your head or on a tiny little drive.
And verification is cryptographic. It's infalsifiable. The network proves it's real instantly for pennies. No acid test needed.
So gold has physical utility, but Bitcoin is built to be a monetary transfer system.
And it does that job with a borderless efficiency that's just impossible for a heavy metal.
Yeah.
You can send a tiny fraction of it across the world in minutes.
That idea of borderless efficiency, it leads right into trust, history, and sovereignty.
And gold's history is its most persuasive argument. I mean, 5,000 years.
That's a very long time.
It has survived every empire, every fiat currency. That kind of trust is cultural. It's deep in our psychology. You can't just ignore that.
No, you can't. But history is a double-edged sword, especially when you talk about sovereignty.
Because it can be taken away from you.
Exactly. We have to talk about Executive Order 6102 in the U.S., 1933.
The government basically made it illegal for private citizens to hold large amounts of gold. They just confiscated it.
It shows that if you hold a physical thing, the government that controls the physical space can ultimately control your asset.
And even without direct confiscation, if you're holding a lot of it, You almost always have to trust a third party,
A bank, a vault.
which sort of defeats the whole purpose of sovereignty.
And this is where Bitcoin proponents say their asset truly shines.
It's only 15 years old, which is, its Achilles heel.
For sure.
But in that short time, it's been the best performing asset of the decade. The market is learning to trust the code incredibly fast.
And that case for digital sovereignty is just so compelling, especially now.
If you live under a volatile regime, or your bank account can be frozen on a whim,
Bitcoin is resistant to that. No single government or bank controls the network.
it gives you direct monetary sovereignty as long as you control your keys. That's a utility gold just can't match. It doesn't need a trusted intermediary.
We have to be honest, though. It's still young. It hasn't been through a true global financial meltdown combined with, say, a massive prolonged internet blackout.
That's the nightmare scenario traditionalists point to, and they're not wrong to worry about it. It's untested in that specific way.
Okay, let's shift gears a bit. Let's look past the big personalities, past Schiff and CZ, and see what the academic and institutional research says. We need data.
And the literature is pretty clear on one thing. As a form of money, Bitcoin has technologically superior properties.
Okay, unpack that. Because we hear words like fungibility, divisibility. What does that actually mean? Why is Bitcoin better there?
Well, let's take divisibility. You can divide one Bitcoin into 100 million little pieces, satoshis,
And send them easily.
instantly. Now, try to pay for a coffee with a fraction of a gold bar. It's physically impossible.
Right, and verifiability.
Cryptographic proof on the network versus a costly, slow physical assay. The network wins every time.
And fungibility, the idea that every unit is the same.
Exactly. One Bitcoin is the same as any other Bitcoin. With gold, you can have bars that are less pure or have a strange history, requiring them to be melted down and recast. It's not perfectly fungible.
And we're seeing big institutions start to back this up, right?
We are. Research from places like Fidelity or ARK Invest, they're modeling Bitcoin as a completely new asset class,
One with low correlation to stocks and bonds.
which makes it a powerful diversifier for a portfolio. That's a huge deal.
But we have to look at the other side. The Fed, the Bank for International Settlements, they have their criticism,
Oh, absolutely. The number one criticism is its extreme volatility.
which is undeniable.
It makes it a poor unit of account right now. You can't really price things in Bitcoin day to day. That's a huge point for gold.
That volatility is kind of the price of admission for a new asset, but it's a real problem. What about the other big criticisms? Energy use, illicit finance.
The energy debate is evolving. The data from the Bitcoin Mining Council suggests a growing shift to renewables and stranded energy.
So the conversation is shifting from it uses energy to where does the energy come from?
Exactly. And for illicit use, every analysis shows it's a tiny and shrinking percentage compared to the untraceable cash used for crime globally.
Okay. And what about gold's role as a crisis hedge? Is that still holding up?
It's still there, but modern studies show the correlation isn't perfect. In a sudden crash, everyone runs to cash for liquidity, and gold can get sold off just like everything else. It's not an automatic guarantee.
So after breaking all of that down, scarcity, custody, history, data, what's the takeaway? What does this all mean?
I think the most sensible conclusion from the sources is that this is not a zero-sum game.
It's not a fight to the death.
Not at all. The future is probably coexistence. They just serve different purposes, different paradigms.
Bitcoin is shaping up to be the digital gold for the internet age. It's for sovereignty, censorship resistance, for high inflation environments.
It's for people who believe in that new technological paradigm.
And gold.
Gold remains the quintessential physical refuge. It's your insurance against a digital blackout, against extreme volatility. It's for those who trust the tangible, millennia-tested paradigm.
But both sides have their blind spots, don't they?
Huge blind spots. The traditionalists, the Schiffs of the world, they often underestimate the sheer power and speed of technological adoption.
And the Bitcoin maxes.
They can sometimes underestimate the deep psychological weight of gold's history and the very real risks from future regulation or unknown tech challenges.
And there are big challenges ahead for both. For Bitcoin, it's things like scalability.
Getting beyond secondary layers like the Lightning Network for mass adoption, and of course, global regulation.
Especially with CBDCs, central bank digital currencies coming online.
That's a major competitor. For gold, the fight is just staying relevant. It's fighting the perception of being well, obsolete to younger generations.
And solving that ancient problem of moving a heavy metal across the world quickly.
The world just moves too fast for that now.
You know, this whole debate, it really forces you to ask a fundamental question. What is money?
What do you actually trust? Do you trust 5,000 years of physics and history? Or 15 years of mathematics and decentralized code?
And maybe the future isn't Bitcoin or gold.
It's likely a complex, layered system. You might have physical gold for deep storage, Bitcoin for digital sovereignty, CBDCs from the state for daily payments.
And thousands of other digital assets for specific jobs, all
Right.
coexisting.
Exactly.
So if money isn't just one thing anymore, how do you define value and trust in this new fragmented world? Where do you put your confidence?
That's the real question. And hopefully we've given you the tools to start figuring that out for yourself.
Whether you're Team Gold or Team Bitcoin, now you're informed about the strengths and the weaknesses of both.
Keep exploring.
And just remember that closing advice from the source. Don't keep your wealth under the mattress.
Unless it's a mattress with a hardware wallet hidden inside.
We'll catch you on the next deep dive.